Taxand Tax Updates. Disclaimer: the following information is intended only to be a guide. It must not be relied on in or applied to specific situations without previously seeking proper professional advice. Tax facilities in the capital city of Nusantara. At the groundbreaking event held in Hotel Nusantara last September 21, 2023, Jokowi, the current president of the Republic of Indonesia, emphasized that the construction of the capital city of Nusantara, or IKN, in North Penajam Pasir, East Kalimantan, is the government's effort to equalize the economy of the country. The official IKN website released the budget requirements for the construction of the new capital, which reached 466 trillion Indonesian rupiah. Accordingly, the IKN funding is supported by various sources aside from the state budget, including government collaboration with business entities, assets of state-owned enterprises, and private capital. In terms of private investment, the government invites all groups, both domestic and foreign, to contribute in developing IKN. In order to attract investors' interest, the government has provided a number of facilities related to investments carried out for IKN. That is, through the issuance of Government Regulation No. 12 of 2023 regarding the granting of business licenses, ease of doing business, and capital investment facilities for enterprises in IKN. Capital investment facilities include all forms of fiscal and non-fiscal incentives. Specifically for tax facilities, which are the authority of the central government, consist of income tax, VAT, and sales tax on luxury goods and customs. The submission of applications to obtain these facilities is carried out through the Online Single Submission or OSS system. Income tax facilities. There are 9 income tax incentives given at IKN in the form of 1. Reduction of corporate income tax or CIT. Domestic corporate taxpayers who invest at least 10 billion Indonesian rupiah in IKN are given a CIT reduction of 100% or 50% of the income tax payable amount. The types of capital investments provided by facilities are A. Infrastructure and public services, such as the construction and operation of toll roads, seaports, airports, health facilities, development and provision of telecommunication and information technology infrastructures, construction of housing, residential areas and offices, provision of public transportation, etc. B. Economic revival, such as the construction and operation of malls, provision of tourist facilities and star hotels, provision of MICE facilities, fueling stations. C. Other business fields, such as the hardware and/or software industry, trading services, construction services, real estate brokerage services, tourism services, and the creative economy, etc. The amount and period of the CIT reduction incentive is given based on the year during which the capital investment is made, with details as follows. For capital investments made from 2023 to 2030, investments into infrastructure and public services are given a reduction of 100% for 30 years. Investments into economic revival are given 100% reduction for 20 years, and investments into other business fields will receive 100% reduction for 10 years. For capital investments made from 2031 to 2035, investment into infrastructure and public services will be given a 100% reduction for 25 years, economic revival of 100% for 15 years, and in other business fields a reduction of 50% for 10 years. Capital investments made from 2036 to 2045 In infrastructure and public services, will be given a reduction of 100% for 20 years. In economic revival, a reduction of 100% for 10 years. And 50% for 10 years for other business fields. 2. Income tax on financial sector activities in the financial center. Domestic corporate taxpayers and permanent establishments or PEs conducting financial sector business activities in the IKN Financial Center are given a CIT reduction of 100% or 85% of the CIT payable. The financial sector business activities include banking, insurance, capital markets, pension funds, etc. The period allocated for the granting of the facilities is 25 years for capital investments made from 2023 to 2035, or 20 years for capital investments made from 2036 to 2045. 3. Reduction of CIT on the establishment and/or relocation of head offices and/or regional offices until 2045. Domestic taxpayers and enterprises with foreign tax status who establish and/or relocate their head offices and/or regional offices to IKN are given a CIT reduction facility of 100% of the CIT payable for 10 fiscal years and 50% of the CIT payable for the following 10 fiscal years. 4. Reduction of gross income for carrying out the internships and/or vocational training programs in the context of coaching and developing certain competency-based human resources until 2035. Domestic corporate taxpayers that organize and/or involve human resources in educational and/or training activities in IKN for the internships and/or vocational training programs in the context of coaching and developing certain competency-based human resources are given a gross income reduction facility for a maximum of 250% of the total costs incurred. 5. Reduction of gross income for certain research and development or R&D activities until 2035. Domestic corporate taxpayers which have sites and/or locations for business that carry out certain R&D activities in IKN are given a gross income reduction facility for a maximum of 350% of the total costs incurred for R&D activities expensed within a certain period of time. 6. Reduction of gross income from donations and/or construction costs for public facilities, social facilities, and/or other non-profit facilities until 2035. Domestic corporate taxpayers who provide donations and/or construction costs for public facilities, social facilities, and/or other non-profit facilities in the IKN area are given a gross income reduction facility of a maximum of 200% of the total costs incurred for the construction of public facilities, social facilities, and/or other non-profit facilities. 7. Article 21 Income tax is borne by the government and is final until 2035. Article 21 Income tax on income received by employees who receive income from certain employers, reside in the IKN area, and have a tax identification number, who are registered with the tax office in the IKN area, will be borne by the government and will be final. Government-borne Article 21 income tax must be paid in cash by the employer upon paying income to employees, and will not be counted as income subject to tax. 8. 0% final income tax on income from the gross turnover of certain businesses in micro, small, and medium enterprises, or MSMEs. Domestic corporate taxpayers, excluding PEs, who invest less than 10 billion Indonesian rupiah in IKN and meet certain requirements may be given a final income tax facility at a rate of 0% on income from the gross turnover of up to 50 billion Indonesian rupiah in one fiscal year, which is received at the business domicile in the IKN area, except for income that is exempt from the imposition of final income tax. 9. Reduction of income tax on the transfer of rights to land and/or buildings until 2035. The income tax reduction facility for the transfer of rights to land and/or buildings in IKN is provided at 100% of the amount of income tax payable. Facilities are provided in the event that there is a transfer of rights to land and/or buildings to the buyer, which constitutes the first acquisition of rights to land and/or buildings in the IKN and is provided through the issuance of a tax exemption letter. B. Value-added tax, or VAT, and sales tax on luxury goods facilities provided in the IKN until 2035. 1. VAT is not collected on a. The delivery of certain strategic taxable goods and/or taxable services. B. The import of certain strategic taxable goods. C. The import by and/or delivery to taxable entrepreneurs that generate new and renewable energy in the IKN in the form of machines and factory equipment, both primary machines or equipment, and supporting machines or equipment to produce renewable energy in the IKN. 2. Sales tax on luxury goods exemption for the delivery of taxable goods in the form of the handover of luxury residential accommodation for individuals, companies, and/or ministries or institutions who carry out business activities, operations, or are domiciled in the IKN. C. Customs facilities provided until 2045. 1. Exemption from import duties and import tax facilities for the import of goods by the central or regional government, third parties based on work contracts or agreements, or other parties which are intended for the public interest in the IKN region and partner regions. 2. Exemption from import duties and import tax facilities on imports of capital goods, including machines, devices, factory installation equipment, apparatus, or tools, for the industrial construction and development in the IKN region and partner regions. 3. Exemption from import duties on the import of goods and materials for industrial construction and development in the IKN region and/or partner regions. Thank you for listening to PB Taxand Tax Updates.